Yo, what's up, guys? Welcome back to the channel. Welcome back to another live. Man, crazy week in the stock market. Before I get into that, though, I do want to mention be careful with scammers and spam in the comment section of the videos. Uh, been getting a lot of problems with this, and a couple of people have gotten scammed. So, guys, please be careful. I'm never going to ask you to contact me through WhatsApp. I don't even have WhatsApp, and I don't invest money for my subscribers. So please don't fall for these scammers' tricks. They're just trying to beat you out your money. Also, if you want 6 free stocks from Webull, click on that link down in the description box of the live stream. Sign up for Webull. They're going to give you 6 free stocks, and you can start using the Webull app to join me and my subscribers as we do the $5 per day investment challenge through fractional share trading on the Webull app. So, like I said, click on that link down below if you're interested in that. Well, all right, guys, let's dive on into what a crazy week we had in the stock market. You know, it started off last week last Friday, actually, June 10th, when the CPI numbers came out and inflation was still increasing. I believe it was 8.6%. And then obviously Monday rolled around, Tuesday rolled around, and then Thursday rolled around, and the Federal Reserve increased short-term interest rates by 75 basis points, and that caused the chaos as well. So the market sold off quite a bit towards the end of last week and all of this week. But, you know, I look at it as an opportunity for us to, again, pick up blue chip companies, blue chip ETFs, blue chip cryptos at a discount. And hopefully we hold it long term and build ourselves some wealth. That's exactly what I did. I picked up some Apple. I picked up some Vanguard, total stock market, ETF, which is VTI. I picked up some of that this week. And I'm going to continue every single week. I'm going to continue picking up ETFs or individual stocks or cryptos every single week and just continue to build my portfolio one day at a time. Every day the market's red, I'm going to be buying, right? I'm going to be buying something, but it's going to be blue chip something. I'm not going to be buying anything that's not considered blue chip. And I would advise you guys to take that under consideration when you're out there picking and choosing which investments you want to buy to build long-term wealth. So let me dive on in here. It looks like we got a lot of people already in the chat, and we got some questions coming in. So I'll dive in and start taking some questions. I actually did a live stream earlier on Instagram for a little bit, so I figured why don't I do one on YouTube since that's where my biggest audience is. So let me dive on into some questions. And again, if you want your question to get to the top, obviously it would be nice to get a super chat, and then that'll get your question up to the top. But don't feel obligated to do so. But I got a lot of questions coming. In order to get yours heard, you may want to think about super chat. So let's go ahead and dive into some of these questions. Surely we wait a bit longer before we buy again? No. Again, guys, we shouldn't be trying to time the market. I mean, I'm not sure what we're waiting for. You know, you can pick up a share of Apple for $130. You know, 2 weeks ago it was trading at 150. You know, Apple hadn't changed. There's nothing about Apple that's changed. I mean, it's still a great company, innovative product, same CEO, same senior management team. Nothing's changed other than, you know, the market is selling off because of external issues that Apple has nothing really to do with. So I think it's the right time to start picking up blue chip companies right now. Every day the market's red, pick up a little bit, right? Don't get me wrong. If they continue to slide, then you just buy the dip on the way down. That's what I've been doing. I just been buying the dip on the way down. What I caution people is to try and wait, thinking that there's going to be some magical light that's going to come on and it's going to be like, that's the bottom. Now it's time to buy. No, when people start talking about we've hit the bottom, It's probably too late. We're already going back up. So my recommendation is don't try to time the market, get in the market. Only invest what you can afford to invest. Only invest what you can leave in the market for at least 3 years. And that's it, man. Continue to buy your favorite companies, favorite ETFs, favorite cryptos. This is a time to build wealth, guys. This is not a time where we want to sit on the sideline and try and time the market. See what else we got here. What should we do? What should we be doing now that the market is like this? Well, you should be buying, in my opinion. Again, guys, I'm not your financial advisor, so you got to do what's right for you in your financial freedom journey. But for me, it's not, a hard math problem, right? You buy low and you sell high. Typically, in a bear market, you're buying low. That's where you want to be. You want to be buying now. Then when you get back to a bull market, that's where you want to be like, okay, is it time for me to sell and take my profits? Not the other way around. See, a lot of us think we don't buy when it's low, we buy when it's high because we think that's what we should do. No, that's opposite. You really should be buying in a market like this right now, in my opinion. Don't get me wrong. It probably still has a little bit more to go downward, but just buy all the way down. I don't know. You have to make that decision. For me, though, I'm buying every day the market's red. Every day it's red, and my favorite companies are there, like Apple. I'm buying, right? My favorite ETFs like Vanguard, S&P 500, VOO. If it's there and it's red, I'm buying a little bit. I'm not saying I'm throwing every dollar I got in at once. No, I've taken a certain amount of money that I'm going to be investing every day the market's red. Right? Let's say it's $500 a day based on my financial situation. So every day the market's red, I'm taking $500 and I'm buying my favorite blue chip ETFs, blue chip stocks, and my blue chip cryptos. That's it. See, we got a super chat from Irving Spiderman. What's your opinion on precious metals? Funny you ask. I made a video earlier today that included as a alternative investment to the stock market. Precious metals is one of those investments, specifically gold, right? Gold is a good store of value, right? You can take an ounce of gold, a gold bar, go anywhere in the world, and it'll be accepted as a currency. You'll be able to buy goods and services with it, right? It's a good store of value. So I like precious metals, specifically gold and silver. But for me, if I were to buy precious metals, it would be gold. For that reason. Thoughts on the yen going over 135? Jay Samuels, you're way over my head. I have no thoughts on the yen. I barely have any thoughts on the US dollar. So maybe somebody else in the chat can help Jay Samuels out with that question, but I know nothing about the yen. Aloha, man from Hawaii. Aloha. Nice to see you in the chat. Let's see here. Do you have any gene therapy stock picks? I do not. Anything that has to do with healthcare, I'm probably going to stay with a healthcare ETF like Vanguard Healthcare ETF, VHT. That's pretty much it for me. I don't really go, that's not my specialty to go looking for specific companies that do gene technology. But hey, I'm not saying it's not the right pick for you. It's just not something that I'm willing to get into. Let's see here. Real estate student. As a fellow financial advisor, I absolutely concur with all the Marvin Mitchell's advice. I'm not sure who Marvin Mitchell is, but good for you. Warren D., when you buy on the down days, at what point do you cash out profit? Again, guys, why would I cash out profit in a down market? I cash out profit when? In a bull market, in an up market. So I'm buying now, right? In a bear market. That means the market is selling off, right? From its all-time highs, it's selling off, right? Every day. You may have a little bit of rebound and boom, it's back to selling off again. So that's a bear market. That's a market where I can buy my favorite companies and my favorite ETFs at a discount. So I buy and I hold them, right? I just hold them until in the future, when there is a bull market. So if I buy Apple at $130, right? And I hold Apple for 3 years, 4 years, the economy gets better. Uh, People are piling money in the stock market again. So that's making the stock market go up. Apple goes from 130 to 160, 180, 200. That's when I want to sell. I mean, there's no point in me buying Apple at 130 and then turning around and selling it at 133. I mean, that for me, it makes no sense for me to buy it at the dollar level that I'm putting the money in at. You know what I mean? So my goal is to buy low today, hold as long as it takes until the market corrects itself. And the reason I'm buying blue chip companies is because they have a historical track record of doing well. So I want to buy companies that I believe in the next 3 years is going to be better than they are today. And for me, it's blue chip companies. So that's what I try and invest in. DW, are you still planning to sell your house and rent for a while? No. Definitely changed my mind on that. And the reason I changed my mind on that is because right now in Southwest Florida, where I live, the market is starting to soften a little bit, but it's still super high, especially in really good areas that I want to buy in. So if I want to live in some subpar area, sure, I could get a house, no problem. But I don't want to leave the lifestyle I have in this house and go to something that's not going to give me comparable lifestyle. And in those houses, prices are still pretty high. So for me right now, I'm gonna concentrate more on just making investments with my money in the stock market to build wealth. And then in a couple of years, when I believe the market's right for real estate purchase, then that's when I'll sell the house and move into a new house. But that's just my situation. In your area you live in, the real estate landscape may be totally different. Got a super chat from My Name is Corey. I appreciate it, Corey. Thanks for all you do for the community, Richard. If you're a dad, happy Father's Day. Thank you, Corey, and happy Father's Day to you as well if you're a dad. And I am a dad, by the way, so thank you. Let's see what else we got here. I bought Apple at 85 during the last recession and sold at 365. That's what I'm trying to tell you, man, right there. Boom. Boom. That's exactly what I'm talking about. And that's where I'm headed with Apple. And that's where I'm headed with Tesla and all of my individual stocks and my ETFs, right? And my cryptos. Right there. Exactly what he just said there, or she said right there. That's the magic I'm waiting on to happen. And I believe it will happen in 3-4 years. It's going to take it a little bit, but it will happen at some point because that's what history tells us, right? Let's see what else we got here. JM, okay. Let's see here. Appreciate the content, what you do. Think about Tesla on sale. Love it. Listen, man, anytime I can get Tesla under $700 a share, for me, I'm buying, right? I'm buying. And these last few days, man, you got Tesla. I think Tesla got all the way down to like 640. That's just, for me, man, I don't know about you guys. I'm buying. Again, I'm not throwing the kitchen sink in and everything with it at once. What I'm doing is I'm taking a certain amount of money every single day. The market's red, and I'm buying. So I'm dollar cost averaging in, but I'm dollar cost averaging the market down too, right? I'm buying the dip down. And then over time, I'm just going to accumulate a bunch of blue chip and just hold them. That's it. I'm going to accumulate a bunch of blue chip, hold the blue chip until, it's time for me to exit. Like I mentioned in a video or two ago where I said, you got three stages, right? We got the accumulation stage, which is what? The bear market we're in right now. This is where you accumulate all of your buys, all of your assets. You accumulate them now where they're at a discount. Then when you leave the accumulation stage, which is the bear market, and you go into the growth stage. That's the beginning of a bull market, guys. The growth stage is the beginning of a bull market, right? And then what's exit? The exit stage is where I'm at the top of the bull market, and now I'm contemplating whether I need to exit, take my profits, and move on, or do I take some of my profits, leave the rest, and let them continue to compound? That's the exit stage. So those are the three phases, in my opinion, the way I look at the stock market. At some point, we're always in one of those stages. Right now, we're in the accumulation stage. All right, Just Football. Appreciate the super chat. Hey, Richard, great work on the channel. Top man. Thank you so much, Just Football. I appreciate it. Free Like Summer. Appreciate the super chat, man. That silver squeeze happening this year, I think, yes. There you go. He said it perfectly. Perfect, man. I appreciate you guys on the super chats. Let's see. Anything else we got here? Anyone who voted for? Come on, man. Let's don't get political in here. Let's just keep this thing, keep the politics out of it. Let's just talk about how we're going to continue to buy these blue chips and then building our wealth. That's what we want to talk about. How to buy blue chips, how to make investments work for us so that we can get to our financial freedom. Because as long as somebody else is paying us a check, we're having to clock in somewhere, we're having to trade time for money, we will never, never, never own our own or take control of our own financial destiny. You got to have passive income coming in, guys, to control your financial destiny. And you got to have passive income coming in to control 100% of your time. That's the goal. Lifestyle, right? It's not about having $10 million. It's about having enough assets that generate enough income to pay for the lifestyle that you want for yourself, right? That's what it's all about. Let's keep moving here. Apple reached that high before their last stock split. Could be. I think Apple, I don't know how high Apple will go at some point in the future, but at $130 a share for me, I like those. I like that. I'm in at that price, or even lower, right? Let's see here. Richard, Sheeb is holding up so strong. I'm so impressed with Sheeb. Well, you know something, look, guys. Hey, Sheeb is a meme coin. Let's face it, right? My whole play with Sheeb is this: it's low risk, potentially big reward. You never know when an army is going to get behind somebody online or behind an investment. We never know. We still don't. My thing is, a couple $1,000s that I put in to Sheeb to get myself 100 million Shiba Inu, that was a risk I was willing to take. If it goes to zero tomorrow, I'm okay with that. The people I feel bad for are the people who put in tons and tons of money. So I never was gonna put in tons. All I wanted to do was get to the point where I could put enough in to get me 100 million. And if it goes to a penny, it's worth $1 million. Now, if it goes to zero, I'm okay with that. It's not going to be the end of the world for me. But for most people, you want to stick with Bitcoin and Ethereum. For most people, if you're trying to build wealth, if you're trying to say, well, okay, I got $500, I want to put it in crypto, but I want to be able to start building some wealth long term with crypto, then I would stick with Ethereum and Bitcoin. Let's see what we got here. Does anyone know what kind of Richard does? I'm right here. I'm reading your question. What kind of consulting do I do? I own a financial consulting company, guys. So financial consulting for me revolves around my experiences in real estate investing, stock market investing, creating side hustles, creating and building businesses. That's what financial consulting, personal finance. So helping people put together personal finance budgets and things like that. I have about 25 years of experience doing that, guys, in banking. So very, very skilled at doing that. And that's what I help people do. I do not invest money for people. I do not, well, Richard, hey, I got, I got $100,000. I want you to just tell me what. No, that's not what I do. What I do is somebody says, hey, Richard, listen, I want to be a real estate investor. Help me, walk me through the steps that I need to do in order to put myself in a position to start being able to buy real estate for income. That's what I do. I help people through that. Or someone says, hey, I'm making this much income, but in 10 years, I want to have this much, I want to take my active income and I want to be able to create my active income, the amount of active income that I make, I want that to be coming in from a passive standpoint in 10 years. Can you help me figure out how to do that? That's the type of stuff that I do in the one-on-ones. Christian Torres, thank you for the super chat. Now is the time to pay off those high interest consumer debt so that you can have the cash flow to put capital in investments. Man, you are absolutely right, Christian Torres. This is the time. I'm telling you guys, if you got variable rate debt out there, credit card debt, lines of credit, car loans, whatever, I'm telling you, your rates are getting ready to go up. They just increased short-term rates, the Fed funds rate, by 75 basis points last Thursday. They're going to continue raising interest rates. So that means all you guys carrying all this consumer debt, it's going to strangle you because the interest payments are going to be so high on that debt that whatever payment you're making, none of it will go to the principal. It's going to all go to interest. So please, whatever you do, get yourself out of any high rate credit card debt, high rate personal loan debt, any of that stuff, guys. Get out of it. Let's see what we got here. Supporter Sandra. I can tell you that baby boomers are facing health care at home. In-home care is growing leaps and bounds. So research ETF for home health care. Thanks, Richard. You're absolutely right, guys. We got 65 million baby boomers in this country. We have a growing or a older population, right? Our population of older folks is growing, and she's absolutely right. So that's why I like healthcare. See, I go find me a good healthcare ETF, right? And I'm telling you, because healthcare on an aging population like we have here in the United States, I just don't think you can go wrong with a healthcare ETF, right? You're going to have your top 30, 40, 50 healthcare providers, whether it be true, straight up and down healthcare providers, or whether it be pharmaceutical, they're going to all be in there, right? And Vanguard has a good one for that, right? They got a Vanguard healthcare ETF. I think it's VHT. So check that one out. Justin Vega, appreciate the super chat, man. Thank you for your wise words. It helped me so much. I hope you have a great Father's Day. I watch your videos every day. Justin, thank you, man. I appreciate you. I appreciate your support. Any other questions, guys, before we move on here? Let's see. I think I got some down here that I passed. When do you think the bottom of the bear market will be? End of this year, April 2023, December 2023. What's your take? Honestly, I don't really care when the bottom is. I'm buying right now. I don't know. I don't have a crystal ball. I ain't waiting for the bottom. I'm buying right now. That's what I'm doing. I'm just buying blue chip, blue chip, blue chip, right? If I can buy, like I said, if I can buy Apple at 130 today and it falls to 128 tomorrow, I'll buy more. If it falls to 125 the next day, I'll buy more. If it pops back up to 135, I don't buy. If it pops back down, I buy more. It's pretty simple for me. It's pretty simple for me. I just think I do that over the next 2 to 3 years. Man, I'm gonna increase my net worth. So long as I buy blue chip, right? I gotta buy blue chip though. I'm not gonna buy any of these fly-by-night companies who just showed up around during the pandemic. All of a sudden they want to IPO and do no, I ain't buying any of those new IPO, none of those. I'm buying all blue chip companies that have been around, that have been through a storm, right? Companies that have been through 2008. And survived and thrived. Those are the companies that I'm buying. So let's see who else we got here. All right, let me see what we got here. VOO has a lower expense ratio. Are we in the buyer's market for a house officially? I think we're getting there. I think it's still a seller's market, but at least down here in Southwest Florida where I live, more and more sellers are having to reduce the prices on their originally listed price. They're starting to reduce. And the reason they're reducing, why? Is because there are fewer qualified buyers. With these interest rates at 6% for 30-year fixed rate mortgages, it's starting to trickle down. You're starting to price people out of being able to buy a home. So you got fewer qualified buyers. So now sellers are having to reduce their price to compete for people who just got the money to do it still. But it's only a few, there are fewer of those people. So they're starting to reduce their prices on their homes in order to sell them. At least in Southwest Florida, that's how it is. So I think you're right. I think at some point we will be transitioning back to sort of a neutral, not really a sellers, not really a buyers, but neutral, where people just have to negotiate like they used to. I think that's coming. That's coming soon, in my opinion. Let's see here. Roth IRA and buy dividend stocks. Ryan Lehman, not a bad plan. I want you to buy for, okay, let's see here. Right there. Let's see. Do we got any questions in here? Let's see here. Just don't ever get a DSCR loan. Okay. Sellers are reducing prices in the Northeast too. I can believe that. I mean, real estate's real estate. Yeah, you're going to have some recession-proof markets where, like down here in Florida, in Naples, they got a place called Port Royal where, just billionaires live, man. Some people don't care. They're billionaires. They going to buy whenever they want to buy because they got enough money to do it. But you're an average, everyday person. I don't care if they're a millionaire, they're a multimillionaire. At some point, they hit a ceiling, and they got to back off. What a lot of people are telling me as well that I talk to in the community is that with all the uncertainty in the market, they're just pulling back and saying, "Wait, I'm gonna keep my cash on the sideline until I figure out what's going on. I don't want to buy no real estate just yet until I figure out what's going on with inflation. Are we going to be in a recession?" So they're just waiting because of uncertainty. So that also, in my opinion, will bring real estate prices down. When I talk about real estate, I'm talking about single family, 1 to 4 family residential real estate. UK Philman, maybe I'm pronouncing that right. Appreciate the super chat. This is the first time I catch you live. In the event the Fed officially announces the recession, will that have a knock-on effect on the global stock market and the economy in general? I think it will, because you think about the global economy, the United States is a big part of that, man. Huge part of it. We got the leading economy in the world, right? So I think anything that happens in the United States from a recessionary standpoint, I think it affects the global economy. Absolutely. Hopefully that answered your question, at least from my perspective. Nike is on sale. Absolutely, Nike's on sale. All blue chip on sale, man. For the most part, all blue chips are on sale. Will car market go down as well? Absolutely. Got no other choice. Car market only works if people are buying cars. If people scared to death and they on their last, they're not going to buy no car. So you doggone right it's coming down at some point. I'm telling you, it has to. When people really close down the hatches and start protecting their money and keeping it at the bank and not spending it, yeah, cars are going to be affected by that as well. Absolutely. Because the person who was on the fence of buying a new car, keeping their old car, if they're not happy with what's going on in the economy, most times they're not. They're gonna pull that money and keep it and keep driving that old car. So yeah, dealerships are gonna be affected. They know it, and the thing is, you don't know it, but the dealerships already know it. I just bought a car. I just bought my M5 last week down at the Ferrari dealership. I got a good deal on it because, one, it was off brand. Ferrari don't sell BMWs. If they get them in on trade, they just try to get them out. But I'm talking to they're seeing it too. Things are going to slow down, man. It has to. That's the reason why the Fed is raising interest rates the way they're doing, so they can stop people from spending or discourage people from spending. Let's see what we got here. What's your opinion on Spotify? No opinion at all on Spotify. I've never used Spotify. Hey, Raphael, what's up, man? Spotify, I've never used it. So maybe somebody in the chat can comment on that. I have no experience with Spotify. Should I be buying individual stocks or just ETFs? More comfortable investing in ETFs. Then buy ETFs, man. You'll be fine. Just stick to broad-based stock market ETFs like the S&P total stock market. You'll be fine. You'll be just fine. because those same individual companies I'm buying, they're already in that S&P 500 ETF. So no sense of you going out trying to pick them yourself. Just do yourself a favor. Just buy the S&P 500. You'll be fine. Beast O, I appreciate the super chat. Thoughts on Dave Ramsey? Mad respect for Dave Ramsey. He's been doing it for 100 years, man, helping people get to financial freedom. Obviously, different methodology than I have. I certainly don't want people in debt if it's consumer debt, but I am a big proponent of leveraging money to buy assets that increase in value. I don't mind you taking out debt if you're going to buy an asset that's going to pay for the debt and it's going to build your net worth. I'm okay with that. But a lot of our people, or a lot of the people Dave Ramsey deals with, a lot of those people are beginners, and a lot of them don't really have the financial literacy around how to leverage bank loans and all that stuff. So Dave is helping a whole separate population. But I like Dave. I think the work he does is fantastic, although I don't agree with everything he talks about. Another super chat from Horsepower. Do you think ETH is going below 500? I hope so. I don't want to, trigger anybody on here, but I hope it go below 500 because I want to buy more of it. So if it go below 500, you better believe I'm all over it. I'm all over it right now in fractional share trading. I'm buying fractional. I'm buying fractional right now. But if it goes below 500, you absolutely better believe I'll be buying more of it because I think it's temporary. Again, Bitcoin, ETH, temporary. They will be back at some point. And right now is a great opportunity to just gobble them up, man, while I can, while they cheap, right? Cash money, market headed down for a while. Bitcoin is going to 5,000 and below. Oh, cash money. You talking fight words. Hey, man, I'm with you. I ain't mad at you. If it go below $5,000 a coin, I'm all in. So I'm waiting. But until it goes to that, I'm going to be little small bites through fractional share trade. And I'm going to be biting me a little piece off here and there, just building up a little bit of portfolio of it. And if it go to 5,000 a coin, I'm all in, man. You better believe it. Let's see what else we got here. What do you think about? Okay, we already talked about ETH, or at least my thoughts on it. Doubled my dividends cash flow this year. Stock market aristocrat. Okay, good for you. Let's see what we got. Let's see. Bye. Good. Would you sell a fairly new car that is worth 30K and downsize to a 98 used car worth 5? Absolutely. If that car was preventing me from taking part in this great wealth transfer, I'd sell it in a heartbeat. I'm gonna drive around in a $38,000 car that's depreciating anyways, right? Why would I do that? Sell it now, take that cash, buy you some assets that actually appreciate in value, not depreciate. Listen, man, I'm all for buying cars that depreciate. Y'all know I buy cars. I love cars. But I can afford to do that because I've already built my wealth. I'm building additional wealth. Plus, I got multiple streams of income that's coming in to pay for them. So if you're in that position, then yeah, enjoy yourself, keep it, don't worry about it. But if you're in the building stage of wealth, you need to be taking every dime you have to get yourself to the enjoyment stage of wealth, right? Anytime you're in the building stage of wealth, guys, you got to delay gratification. You can't be buying depreciating assets when you haven't created any appreciating assets. Always appreciating assets first, depreciating assets when you get to the enjoyment stage of wealth. The Jughead 1, appreciate the super chat. Half welcome, brother, my FBA brother. I have been purchasing silver coins and ingots monthly since June 2021. Do you think these are good investments? I'm okay with the purchasing silver coins. The other investment, again, guys, I'm not real versed on all these acronyms or what every investment is. I like silver though. Why? Because it's a precious metal that it stores value real well. Not as good as gold, but it's still pretty decent. Personally, I would be buying gold. if I was really going to do precious metals. And again, guys, going to buy a kilo chain from Ice Champ is not a store of value. That's a depreciating asset because it's not 100% all gold. If it's 14 karat, you got about 54% gold there. The other 46% is something else. It ain't gold. If it's 18 karat, you got about 75% gold. The other is 25% is something else. So buying a kilo chain or buying jewelry that's 14 karat gold is not a store of value. It's not going to appreciate in most cases, unless it's some really rare collectible piece. You going down and buying that's a depreciating asset, man. So just be careful on that. Okay, we got a second part of that question from the Jughead 1, 2 of 2. Do you think it is too late to start an index fund? Love and respect from your Nigerian brother from the UK. No, it's never too late, man. Too late to start. This is the perfect time to start an index fund, right? We're in a bear market. Everything's on sale. All you got to do is find the right index fund you're looking for. I always recommend to people stick with the broader stock market, ETFs, and index funds. Total stock market, S&P. Boom, you're done. You ain't got to do nothing else. Just buy that, and you'll be good. So that's what I try to ask people to consider is just do broad-based ETF, stock market ETF, stock market index fund, and you'll be fine. Let's see here. Beast_O. Thank you for the super chat, man. Thoughts on Robert Kiyosaki? Listen, man, 26 years old, I read Rich Dad, Poor Dad, changed my life. It did. It changed my life because it put a thought in my mind that, wow, so if I got decent credit, right, I got some verifiable income, I can go leverage 5 to 1 and control. So in essence, I can leverage 5 to 1, right? So if it's a $500,000 property, right, I put 20% down, which is $100,000, and then I get to control and draw income off of a $500,000 asset. I mean, that's crazy. So when I heard that, I'm thinking, oh, that's it then. That's what I'm gonna do. That's how I'm gonna increase my net worth. I'm gonna start buying single family homes. I'm gonna go to the bank. I'm gonna give them 20%. They're gonna give me 80%. And I'm just gonna rinse and repeat and build me a real estate portfolio of single family homes and great areas that people have a desire to live in. And I'm gonna build my net worth that way with a very little money. And that's what I learned from Rich Dad, Poor Dad. How to leverage money. OPM, other people's money. And the other people being who? The bank. Right? That's who I leverage. I leverage money from the bank. But I got to have decent credit and I got to have verifiable income. Because banks make loans to get paid back. I can't walk in there talking about, oh, I lost my job, but I think I'm going to get one next week. But hey, give me this $1,000 or $1,500 or $10,000 to start my business. No, they're not going to do it. You got to have decent credit and you got to have verifiable income. Or you got to walk in there with a business plan that convinces them the business you're getting ready to start with this money they're going to lend you is going to be profitable and be able to pay them back. If you can't demonstrate that, you're not going to be able to borrow any money through traditional means. You're going to have to go into the secondary market, hard money, that type of thing. But no, I think Rich Dad Poor Dad is one of the books that all of you guys should read, whether you like Robert Kiyosaki or not, because it has a lot of good principles in there about how to leverage money. All right, let me move back down here. I got another super chat. Uptown G5, appreciate the super chat, man. Do you think I should transition to Vanguard S&P 500 ETF away from Schwab ETF and indexes? Well, it depends. So when I'm looking at which one I want to invest in, right? Let's say Schwab has, which they do. Let's say Schwab has an S&P 500, and they don't call it S&P 500. They call it Schwab 500 something, but it's the same thing. And then you got Vanguard's VOO over here. So I look at both of them. What I'm looking at is what? Number one thing I'm looking at is performance. So I'm going to look at both of them. Number one thing I'm going to do is I'm going to go look at what the historical performance for the last 10 years has been on the S&P 500 index, because that's what they're tracking, right? So I'm going to go find the index for the last 10 years, see what the rate of return was. Then I'm going to go to Vanguard and I'm going to go to Schwab and I'm going to look at their S&P 500 ETF. And I'm going to look at the performance on that ETF over the last 10 years. Is it the same or better than the index? That's the first thing I'm going to look at, performance. The second thing I'm going to look at is expense ratio. So I'm going to look at Schwab 500 ETF. I'm going to look at Vanguard's S&P 500 ETF and see who's going to charge me more to manage my money. So I know over at Vanguard is 0.03% for every $10,000 I invest into VOO, which is basically $3 a year to manage that $10,000. Now, I don't know on the top of my head what Schwab's is, but let's just say Schwab's was 0.15, right? Let's say Vanguard got a better performance, but Schwab has lower fees. Then I got to figure out what's more important to me and which, net, which one is going to give me the better bang for my buck. Personally, I like Vanguard just because Vanguard is a pioneer in this space. You know, they're probably the only true mutual fund company out there, right? Investment company. So I like that history. They've been doing it for 70 plus years. And I like their customer service. So I go with Vanguard, but you can choose whoever you want. But that's the process that I would go through when I'm looking at ETFs or index funds. I'm going to look at them just like that, performance against the index that they're tracking. And then I'm going to look at the fees. Let's see what we got here. All right, we got another super chat, and that's coming from Obsidian Lion, the code keeper. Thank you, man. Appreciate the super chat. I took $3,000 out of my mom's bank account. I put it on Cardano. I'm down 95%. I need to come up before she find out. What would you do? Look, man, you need to go talk to your mom. You need to sit down with mom and say, hey, I did something that I shouldn't have done, but I'm going to make you whole. And then you got to get out and hustle, man, and go make mom whole. I wouldn't worry about Cardano right now. I mean, I wouldn't sell it. I would just hold on to it, but it's going to be a while before it recovers. So you may want to go out and grab your side hustle, some extra hours at the job or something, and make mom whole. But I would go and come clean to mom right now. Just tell her the truth. And she'll have you back. You just need to wise up. From here on out, man, I keep telling y'all better leave all these little side. If you go in crypto, you better go blue chip. You better go, I'm telling you, better go Bitcoin or Ethereum. If you go in crypto, and then if you go on stocks or if you go on ETFs, you better go with the blue chip ones. That's going to give you your best opportunity to win long term, man, in my opinion. All right, let's see what else we got here. What? This guy. Come on, guys, man. Keep the chat clean, man. Y'all jokers in here. Y'all jokers need to be ashamed of yourself, man. Boy, okay. All right, let's see what else we got in here, man. Calvin Harvey also own an event space. Okay, he must be talking to somebody else. Do we got any other questions, guys? Before I sign off, I'm gonna stay on the live an hour, so I got about 15 minutes left. So let me know if you got any other questions here. Let's see here. Is a Rolex presidential or a Rolex in general a good investment? And that's from Christopher Michael. I think any Rolex right now is highly sought after, right? But you got to understand, we're coming into a market now where, assets are not worth what they used to be. So what that means is the people who own those assets, their net worth has shrunk. Normally when net worth shrinks, people's bank accounts shrink, they start selling assets in order to take care of themselves. And when you have more supply than demand, right? That's when you start picking up Rolexes at a discount. Now, I don't know if that'll happen But if this thing continues the way it's going, I wouldn't be buying a Rolex for an investment. I'd just be, keeping my money and putting it in assets that I know long term is going to build wealth. Me taking 30 grand and buying a Rolex when I could take 30 grand and put it in an S&P 500 VOO, in my opinion, it's a no brainer. But again, everybody has to go down their own financial path. Not a path I would go down. I would just take my money and put it in the market, into something in a blue chip, over buying a Rolex trying to flip it down the road. Let's see how please how to invest 100K on stocks. Okay, I can't tell you how to invest 100K on stocks. What I would do is just say, figure out what your financial goals are, and if you want to take that 100K and give yourself the best opportunity to say double it in the next 7 years, then the stock market may not be a bad option for you. Think about blue chip stocks, blue chip ETFs, like I've talked about, and think about placing the money there. But you got to make that decision. But I think for me, if I had 100K to invest, I'd probably be putting it in the stock market. As long as it's not my last 100K and I got no other money in the world, then of course not. I would put it all in there, but I would put a portion of it in. And then I would keep a portion back as a safety net. And then I'd put a portion in for growth. Let's see who else we got in here. Let's see, I got about 15 minutes left, guys, and then I'm going to sign off. Let's see how many other questions we got. Would you invest in a startup robotic company? Let me see. Let me get that back again. I think I missed that. Oh, here we go. Would you invest in a startup robotic company like Miso Robotics? I personally wouldn't, but that doesn't mean you shouldn't. I don't know anything about robotics. So I only invest in things I know something about or I use, right? So that's why I like Apple. That's why I like, Facebook. That's why I like Home Depot. That's why I like Target. I like United Healthcare. I like Starbucks. These are things I use. These are places that I spend my money at. So if I'm going to invest in something, it needs to be in companies that I already use. So that's my thing. But if you like robotics and you know this company and you believe in the mission, you believe in it'll be a great company, then yeah, go right ahead. Let's see. Hey, hello, Richard. Love your channel. During a bull market, when you decide to take profit, how do you handle or offset the capital gains? Well, listen, guys, I mean, I'm no creative tax guy. I just listen. If I got a if I have $100,000 in capital gains, if I had a $100,000 gain, and then I got to pay taxes on whatever portion of that I got to pay to Uncle Sam, then I got to pay it. I'm gonna do everything within the law, right? I'm gonna do everything within the IRS tax code that's available to me to only pay my fair share. But I would go get me a CPA who is qualified to help me with that. That's what I do. I have a CPA. So anytime I have any questions on any income I make or taxes or anything like that, I have a CPA I've used for 25 years. I just give him a call, tell him my situation, and he will give me the best course of action to take in order to only pay my fair share of taxes. I'm not trying to evade taxes. I'm just trying to avoid paying taxes that are not my fair share. So my recommendation, talk with a CPA and get you a good CPA, and they will help you navigate those tax laws and use everything available within the law to help you avoid paying taxes that you shouldn't be paying. That's what I recommend you do. Let's see here. All right, let's see what we got here. Hey, Richard, what are some good quality dividend paying stocks? I recently bought some AT&T, but I'm looking for a few more. Hey, man, I like, I think Exxon. Exxon is a good company that pays a good dividend. I like Wells Fargo. They pay a good dividend. I think their dividend right now is about 21 cents per share on a quarterly basis. It used to be about 51 cents, but I think it'll get back there right now. It's about 21 cents per share per quarter. Who are some other good ones out there? You mentioned AT&T. They're one of the big boys. There are many out there, man. All you got to do is do a Google search on, top 10 highest paying dividend companies out there. It's easy information to find, very easy to find. And if that's what you're looking for to put money in companies so that you can derive an income, then yes, that's what you would do. You find some blue chip companies who pay good, strong dividends, and that's where I would park my money, and you can get income from it, right? Through dividends. Or you can get good dividends and just reinvest them until you're ready to take the income. So there you go. That's my recommendation. Take a look at that. Let's see here. Let's see here. I'm already broke when I get a check now. Okay. Come on, guys, man. Good evening. I have 50K to invest that I inherited. Do you advise to purchase land or start my own business for passive income? Well, listen, 50K, I don't know your full financial picture. I don't know where you're at in that financial freedom journey. But if you got 50K and you want to multiply it, you certainly can do that through starting a business. You can do it through investing in income producing real estate. You can do that through the stock market. But it really all depends on really what your goals are. Really, it depends on, what goals do you have set for yourself financially? And how can I use that $50,000 to get me to those goals? Because if you haven't sat down and came up with some specific goals, specific financial goals, then I think you should do that first, and then decide how you want to deploy the 50K to help you get to really your end goal. Really, the end goal should be what? Passive income. 50K by itself, I'm not sure what type of financial situation you're in, but 50K is probably a start. It's probably not enough to invest in real estate or the stock market to derive a huge passive income. Now, sure, you could take the 50K and start a business that you could quickly, scale up and make some good income from that business that you could then take and invest in assets that create passive income. But I would work on figuring out what my financial goals are before I deploy that money. You need to specifically know what you're trying to accomplish long term with your financial goals, and then figure out how that 50K can help you get there. Denise Williams, my TIAA funds dropped 200K. I am planning to retire next summer, and my pension of about 2,600 per month, and my Social Security is about 28 per month. How long for the market to come back? Well, that is a concern, Denise, because as you get closer to a retirement age, the rule of thumb is you start transitioning your retirement money out of equities, and you start kind of transition them into something a little bit safer like bonds or US treasuries and that kind of stuff. Because they typically, you typically don't get a big return, but typically they're safer, right? So that's something that I probably, you'll probably need to speak with. I'm not sure the administrator who handles your TIAA funds. You may want to speak with them and see if they have any thoughts on that. But if you can get by on the pension and the Social Security, and you got a few years to wait for the rebound, depending upon what you got the money in. I don't know what your investments are and how they'll do long term. But if you can wait at this point, I'm not sure what you got to lose, right? It's 200K and you haven't lost it yet until you actually, sell the asset. You haven't sold it yet. Yes, the value has decreased. But if it's in good, strong investments that have a historical track record of bouncing back, then you should be okay. But you got to figure that out. I would figure out a way to take the 2,600 to 2,800 and sort of use that to live on, and then give my investment an opportunity to bounce back. Or you may have to take the tough decision to say, nope, I'm going to reallocate what's left to something a little bit more safer so that I can depend on it. I again would say talk with the people who are the administrator over your TIAA funds and see if they give you some options that might work for you. Let's keep moving here. I got 5 minutes, I think. Yeah, I'm going to get out of here in 5 minutes. So let's see here. I'm trying to see if we got any other questions. Yeah, okay. Juan L, appreciate the super chat, man. Let's see what your question is here. Oh, let me slow it down because it's moving. Let me see what's up, Rich? I got about 20K in buying power, looking at buying 100 shares of Visa, Apple, or Starbucks. Which one do you think will be the safest asset for the most beneficial returns? I'd take the 20K and I'd split it up between the three and let it ride. I wouldn't go in all on one. I would take the 20K and I would split it up evenly between Visa, Apple, and Starbucks. All blue chip, all will be great in the future. I wouldn't worry about it, man. I wouldn't pick one. And I wouldn't concentrate myself. See, what you don't want to do is take your 20K and you just concentrate it in Starbucks, right? And then something happened to Starbucks, your whole 20K gone. What I would do is I would diversify it by splitting it up in all three of them because they're all blue chip, right? They're all companies that we believe will be here tomorrow, right? And we believe tomorrow they'll be better than they were today financially. At least that's what our hope is. We don't have a crystal ball, but if history tells us Visa, Apple, Starbucks have been great companies to invest in. So I don't see why that would change overnight. My point is, don't concentrate it all into one, split it up between the three. That's what I would do. But your money, you do what you think is best, but I would go that diversification route and pick up all three. Let's see here. What we got here? How are you handling the stock decline yourself psychologically? That's from Ashley Price. Well, I'm handling it fine because I've been through this before. Like I said, I'm older than most of you guys. I went through the 2001. I went through the 2008. So I know how the market works. I know it won't be like this forever, man. That's why I keep telling y'all, buy if you can afford it. It won't be like this forever. But the way I sleep at night is because I keep a level of cash on the sideline. Like I've already told y'all in other videos, I keep 25% of my money in cash. 75% is in the market. That's what I do. That helps me sleep at night because I don't have to worry about, oh God, I got all my life savings in the stock. No, I'm never going to put all my money 100% in anything. I'm always going to keep a level of cash. And I know a lot of people may say, well, your purchasing power is diminishing because you got so much in cash. I don't really care about all that. The last time I checked, okay, milk is higher. Don't get me wrong, things are higher, but I can go to sleep at night. I got a lot of money in the market, but I also got enough money on the sideline that I can weather any storm, right? If this thing is don't come back for 10 years, I got enough money on the sideline that I can get through. And also, I know how to make money, right? See, I know how to make money. Not only do I know how to multiply it, I know how to make it, and I know how to keep it. So I'm constantly earning every single month, though. So although I got a lot of money in the market, I'm not concerned because I'm making a lot of money every month. Plus, I already got a lot of money on the sideline. So for people who don't have that type of financial statement like I do, then I would say never put all your money in anything, any one asset, right? I would say you should always have cash reserves, at least an emergency fund, 3 to 12 months of expenses set aside in an emergency fund. Never put all of your money into an asset, especially an asset that's volatile right now, like the stock market, right? Or, so that's what I do and that helps me sleep better at night by just having money on the sideline. Do you think Amazon, Tesla, Apple, and the S&P 500 are good investments to start investing in for a new investor? Well, I think definitely the S&P 500 is because all the other companies you mentioned, they're already in the S&P 500. So I don't necessarily think you have to go buy individual stocks unless you want to because all of those companies you just mentioned in your question, they're in the S&P 500 already, right? So if I got $10,000, I might as well just take my 10 and I just put it in the S&P because I've already got Tesla, Amazon, Apple. They're already in the S&P 500, right? So now if I want to go just because I want to own individual shares of those companies, then again, what I would do is I would take, let's say you got 10 grand. I'd probably take 5 grand and I'd put in the S&P, broader stock market, right? 500 companies. And then maybe I take 5 grand and I split that 5 grand equally between Amazon, Tesla, and Apple as individual stock holdings. That's probably what I would do if I had 10 grand, right? Let's see here. How much cash should you keep if you have 475 in the stock market already? How much cash should you keep is whatever your expenses are. So if your expenses are 5 grand a month and you feel comfortable having, 12 months of your expenses, then you would keep 60 grand. You keep 60 grand. If your expenses are 5 grand a month and your comfort level, which helps you sleep at night knowing you got 475 in the market, then you should have, if you're, like I said, it depends on what your monthly expenses are. But have 12 months of your monthly expenses and then, be invested with the rest of it. And then, that should give you a comfort level, at least to know if I get a bump in the road, I got 12 months that I can take care of myself without having to worry about where I'm going to get money from because I got my safety net over here. At least that's what works for me. Okay, last one. We're already over an hour. So let me get 1 or 2 more questions in, guys, and then I'm out of here. Chester Williams, are there any stocks you prefer over alternative investments? Say real estate investing, gold, silver, for example. Are there any stocks you prefer over alternative investments? Well, I mean, for me right now, it's just the stock market because that's where the opportunity is. So I wouldn't put any money in real estate right now unless a really super, super good deal came along. Because for me at least, I'd rather take the short term and not get a return on my money, but acquire a bunch of really good assets that I know later on are going to be worth a lot. I'd rather give up the cash flow now that I would get from a piece of real estate, and I'd rather take my money that I would spend on a piece of real estate, and I'd rather just buy these discounted assets right now in the market. That's what I would rather do. And then, 3 years, 5 years from now, reap the benefits. Now, like I said, though, if a really good real estate deal came along that just was a no-brainer, then of course I'd pull the trigger and buy the real estate. But where I live right now and the kind of real estate I want to buy, I haven't found those deals yet, right? I just haven't. So I just rather keep my money, keep plowing it into the stock market and buying blue chip and holding those blue chip to some point in the future. But everybody got a different situation on that. You got to figure out what's best for you. But nothing wrong with real estate, nothing wrong with gold and silver. Just not the right investment for me right now. All mine is going to be concentrated on the stock market for the foreseeable future, because I believe that's where I'm going to get the biggest lift. Now, when real estate starts trending downward price-wise and I can start picking up really good deals again, oh, heck yeah, I'm all in. Right now, ain't no deals yet. Ain't no need of me paying you, because the houses that I'm looking to buy, they're going to probably cost me, the single family homes in my area that I'm trying to buy, if I buy them right now, they're going to cost me 600 grand. But if I wait a year or two, I could probably get them for 4. So I'd rather just wait a couple of years. And in the meantime, I'm going to be buying up all of these blue chip assets while they're on sale. And by the time the real estate market comes down to where I'm comfortable again, hopefully the stock market is starting to recover, right? As real estate comes down, stock market's starting to recover, right? And then guess what I do? Take profits from the stock market, deploy them into real estate, multiply that money again as the real estate market rebounds. You know what I'm saying? That's kind of the cycles that I go through with the money. if that makes sense. I thought I had a super chat. Okay, last super chat and I'm out of here. Thoughts become things. If you can see it in your mind, you can hold it in your hands. Amen, Super Friday. Appreciate the super chat. And you know it, man. That's the saying right there, guys. If you can see it up here, you can hold it right here. Absolutely. Right? Positive thinking, man. No negative stuff, right? All positive. Let's visualize what we want. Let's put a plan together and then go get it. Well, all right, guys. I appreciate y'all tapping in, uh, joining me for this hour on the live stream. I hope it was beneficial to you. I hope you guys got your questions answered. Get ready to go next week. We may have some more sell-off, so that'll create more opportunity for us to be able to buy some of our favorite blue chip companies, favorite blue chip ETFs, favorite blue chip cryptos, all blue chip, guys. We got to stay blue chip. Nothing less than blue chip. Only buy blue chip, right? Again, guys, if you want those 6 free Webull stocks, go down to the description box of the live stream, click on that Webull link, open up your new account. They're going to give you 6 free stocks. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace.